Hello and welcome to this week's US Stock Market Report. I'm Dale Gillham, Chief Analyst at Wealth Within. This week I'll be discussing 11 traits of great traders, and then I'm diving into the Dow Jones, the S&P 500, Amazon and Berkshire Hathaway. Before we jump into the report, I'd just like to mention if you have any thoughts on investing or trading, please comment below and subscribe to our channel to keep up to date with our new content. So let's get into this week's report. So what are the 11 traits of great traders? Well, firstly, great traders are open-minded to new opportunities, whilst average traders are often closed-minded. Great traders are always learning as they are a student of the market. Average traders either believe they know it all or believe that information equals education, and we know that's not the case. Now, great traders do set goals and work towards them. Some of the best traders I've seen have very good and very well structured goals. Average traders, well, what they do is they wait for things to happen to them rather than set a plan to get their goals. Now, great traders accept responsibility for their beliefs, their thoughts, and their actions, whereas average traders blame others for their situation. Great traders admit a bad mistake and move to rectify it quickly. Average traders tend to hide their mistakes and live in the hope that things will turn out fine. Great traders think with an abundant mindset, meaning there's always going to be another great trade. Average traders, however, have a scarcity mindset and they can't find trades. All too often I find that average traders ring up and say, I can't find anything to buy, where the great traders say to me, hey, isn't there great opportunity in the market right now? Now, great traders are self-sufficient and they rely solely on their own judgment, whereas I find average traders seek external validation for what they are doing, and they are often seeking tips from others. Quite often they'll be ringing up going, what are you buying? Or looking at the chat forums about what other people are buying, or subscribing to newsletters. Real traders don't actually do that. The best traders rely solely on themselves. Now, the next one is great traders know the value of having a good education. Now, average traders know the price of the education, but not the value, and so they pay the price for a poor education. Now, great traders are disciplined and put time into their education. They also put time into research and their trading prior to entering the market. Average traders look for the easy way and often are reactive to the market. So they trade on speculation, not on confirmation. Now, great traders see challenges as an opportunity to learn, whereas average traders treat them as all too hard, and so they get stuck in a roadblock and then they give up. Great traders have faith in themselves and treat their tools as something they can utilize, whereas average traders put their faith in the tools to make them successful. So let's get into the charts and have a look. Okay, on your screen right now, there's a weekly chart of the Dow Jones Index. And as you can see there, I've still got the work that I did or have done on the charts from the last few recordings that I've got. And the move up from that low back in August 2015 right through to that high in January 2018. You can still see how it's way above that level of support that I've got at 22,322 points. If we scroll this up and we do look at it a little bit more detail, you can see here how we have a lower peak from that one. So there's one lower peak, and now we've made a second lower peak because of last week's bar. So when you're seeing uptrends are consecutive higher peaks and higher troughs, downtrends are consecutive lower peaks and lower troughs. At this point in time, our lowest low was that 23,360 points. We've got there, sorry, not that one. It was broken just only a few weeks ago by about 23,344 point bar of the 6th of April. So what I'm expecting now, given we've made a lower low here, in terms of that is we'll probably start seeing it keep drifting lower and breaking below that last bar that I mentioned there with that low of 23,344 and start heading towards this 22,322 point mark. Interesting though, the bar is a little bit more bullish here. It did open on its high. The market did push down and saw it close right back up in that top third of the bar. And it's quite interesting when a stock does that. It is a little bit more bullish. Like the bears did try to push it down, but the buyers came back in later in the week to take it back up to close at 24,311 points for that week, ending the 27th of April. Again, I still think it's got more downside risk. Now, I'm going to have a look at Berkshire Hathaway, and I'm going to have a look at Amazon, as I mentioned in the report. So let's get stuck into Berkshire Hathaway. And when I go down to it, Berkshire Hathaway is really two stocks. It's Berkshire Hathaway A and Berkshire Hathaway B stocks. Obviously Berkshire Hathaway A, and you can see there on the left-hand side of your screen there with the A stock. We're looking at that. It's now trading at, it closed at $295,995, and that's quite a phenomenal price, a share price for a stock. And this is where the argument I have, a lot of people say to me, oh, I want to buy this stock because it's cheap, and they say some stocks are very, very expensive. And this is really what gets me, is if you'd had Berkshire Hathaway shares back in March 2009, they were $74,300. So in March 2009, in 9 years, they're now up to over $300,000. And I know a lot of people would have thought, wow, they're really expensive back at $70,000, and they're not a cheap stock, as you can see there. But prices are relevant to whether it's cheap or whether it's expensive. It's just the ability for it to make you money, and is it going up or is it going down? And that's the main thing you're looking at. Is there value for you to get into that stock? Right now, I can't see Berkshire Hathaway slowing down anytime soon, but it is looking nice. It's a little bit more bearish the last couple of months, and it probably is due for a little bit of a pullback. It generally has a pullback every couple of years. As you can see here, there's one down into 2012, 14, 16. So we are due for a bit of a pullback. So I would suggest it's going to come back a little bit further if you've got Berkshire Hathaway A shares. And as I said, it's probably going to come back into the realms. I put my little tool on here. You're probably looking around 273,088 before it finds some support. So let's have a look at the B shares. These ones are a little bit more affordable, I suppose, for most people, and what they're looking at here. You probably find the same rhythm as the A shares. It's a little bit more liquid. Given this, you're looking at this saying, Berkshire Hathaway B shares are now trading at 197.23. As you can see, it looks pretty similar to the A shares, doesn't it? Very, very much so. So right now is an opportunity for you to sit back and wait and have a look at Berkshire Hathaway B shares. And I'll just put my little tool on here and watch it fall away a little bit, and then come in later on once it's found some support to get in a nice buy on this stock. So I'm looking at it to go to between $181 and possibly down to $170. So that's probably what it will do. It might do that over multiple months, but right now sit back, wait, and then come in good. Warren Buffett, as you know, is one of the best investors the world's ever seen. So I can't see this stock really slowing down too much soon, but it is due for a bit of a pullback. Amazon's been in the news a little bit lately, and it's quite interesting. Looking at a stock like Amazon, it's just phenomenal growth, as you can see there. This is currently a monthly chart on the screen with all of the data to do with Amazon that I've got here, right back to 1997, and you can see here since 2008, it just keeps going up and up and up. And one of the important things that I teach traders is really what goes up fast will start to come down fast, and all runs will eventually end. We need a correction on everything. It gets too heated or the price gets too hot. So if we look here, back here in, what's that, September 2017, only some 9 months ago, Amazon was trading at around $1,000, and now it's trading at around $1,600. People still remember that Amazon was around $1,000 or below $1,000 12 months ago. And so being at $1,600 now, they're starting to say, wow, that's expensive. Let's wait for it to come back a little bit before I buy it. But one of the things I do when I look at this is I just use the trendline tools, and I just draw some lines. And what I look at here is the angle and the momentum of the trend. If it starts to go up quite steeply, and as you can see there, it's doing that. And if I've got to draw more than 4 of these lines for the steepness, then the peak is coming pretty soon. And you can see here, I've got 1, 2, 3. I'm on a 4th line there, just having a brief look at that. I don't expect this run's going to last too much longer. So is now the time to get into Amazon? No, it's not the time to get into Amazon now. That was a year ago or 2 years ago when you would have had a beautiful run on this stock. Right now is to sit back and watch and wait for it to pull back a little bit, because what you'll start seeing is some profit taking on this stock in the not too distant future. And I don't mean next week, and more even, maybe not even next month, but probably in the next 6 to 12 months, you'll see a nice pullback on this stock, and then that will be your opportunity in another great stock on the marketplace. So good luck, good trading, and I'll talk to you next week. What are your thoughts? If you've got any questions, please comment below. Go and listen to our Talking Wealth podcast. They're available on Soundcloud and on our website. Now they're jam-packed with valuable information which will help you elevate your trading. Now if you're serious about learning to trade the share market and you'd like more information about our courses, please click the link in the video description below. Thank you very much for watching this video. If you've liked the video, remember to subscribe to keep up to date. I'm Dale Gillham, the Chief Analyst here at Wealth Within. Goodbye, good luck, and good trading.